So what did you think of the plan?
Well, I agree with Peter about breaking it up into 3 companies. I think that's a mistake.
Okay.
You know, to say it's too big to manage, it's a fraction of what AIG was.
It's smaller than the company you ran.
Oh, absolutely.
Right.
Maybe about half.
So the size is not the problem.
The size is not the problem. It shouldn't be the problem. You know, it sold off some of its best assets, AIA, Alico, and others. It's not as deep in the foreign field as it used to be. Mm-hmm. We were in 137 countries, not just there, but doing business and growing in these countries. It's nothing like that now.
Right.
And they've lost many people, some voluntarily and some that they've been shrinking the size of the company.
Right. So, I mean, they've gone through, you know, as you say, it's a smaller company than it was before, and they've certainly gone through some pretty big, you know, turmoil that they're climbing out of, but they're underperforming still,
Yeah.
right? They're particularly underperforming against their peers. So do you think today's plan went far enough?
Well, it's not how far it went only. It's a question how they will implement it and whether or not they can execute.
Right.
You know, all of that remains to be seen. They've raised reserves, and I discussed this with Peter. Mm-hmm.
Did you discuss this with Peter before today?
No, today.
Oh, today. Okay.
They increased loss reserves going back many years, and then expect that in 2017 they'll be able to show a redundancy in reserves. Well, how do you know that in 2017? This is 2016. How do you know that? Unless you've overcompensated so you can take down reserves by showing that it looks better than it really is. I mean, I think that's confusing.
Okay. Would you have done anything different then?
You'd only increase reserves if you need to increase reserves. These are long tail reserves.
Right.
Always a little volatility in that. But going back and now increasing them, what were they doing in between? Where were the auditors? Weren't the auditors looking at the reserves?
Right.
And why would you have to wait so many years to find out?
Right.
That didn't make much sense.
So that doesn't make much sense to you?
Not to me. And then, so now you're increasing reserves, but you're saying in advance that we're going to be redundant in 2017.
How do you know?
How do you know that?
Right.
I mean, you got some kind of a magic thing you're looking at?
So in your view, he has some more explaining to do and how he's going to execute this.
Yeah.
So let me just clarify. So did you talk to Peter before, about this plan beforehand?
Very briefly. We spoke on the phone very briefly.
Okay.
Until I saw the plan, then.
Right.
And then it was after that.
Okay. Do you agree with some of the moves today, like selling part of or IPOing part of the mortgage insurer?
I don't think it does very much. Okay.
Okay.
It doesn't do very much, and selling some of the distribution on some of the life thing, it doesn't do very much. Look, it's not the same company. It's a much smaller company than it historically was. It was the largest insurance company in history.
Right.
Okay, and the most successful.
Well, some of the critics have said, including ICAHN, right, that you should separate out, for instance, they're recommending to Peter, separate out the life and the PNC, right? And part of that has to do with the systemically important designation on AIG. Why not get rid of that the way MetLife is, for instance?
Well, it's a different company. MetLife's a different company. I think that's a mistake. For several reasons. First of all, having both classes of business gives you a better balance. One supports the other. When one is a little soft, the other is probably not.
Right. That's what Hancock says too. That's his argument.
Well, it's true. I mean, that part I believe is true. If you're running your businesses right.
Right.
And in any event, it seems to me that AIG should be contesting the designation. They're half the size that they were. And so why are they being held to a size that they're no longer at?
So how should they contest that, Hank?
Well, I assume there's a regulation or law, so you challenge it.
Okay. Go to court?
If you have to.
Right.
We did that.
I know that I know you.
Yeah.
And you would fight that. You know, Peter mentioned that actually, the whole diversification and how that, you know, that is a good buffer for AIG, that actually works for the company, as you say, as long as it's performing well. And I want you to listen to what Peter said earlier today about that diversification.
Our business is absorbing the risks of our clients and managing them. And to manage those risks, we need to use diversification. So diversification is critical, and if you were to break up the company, you would lose between $5 and $10 billion of diversification benefits at the minimum. And that's in the eyes of the rating agencies. And
Is it the tax assets that you're talking about?
No, this is just simply risk diversification. It's saying that you have a sizable property casualty business which has uncertainties balanced by the stable cash flows of the life and retirement business. From a tax perspective, that's a further reason why splitting the company would be very expensive.
Hank, in your view, is Peter the right person for AIG?
Well, he's going to have to prove that he is. Until he does, you know, there's a question mark.
It sounds to me like, yes, then there is a question mark to you. You're doubtful.
Well, look, I hope he doesn't. I'd like to see AIG regain some of the strength and stature that it had. I don't see it yet. It's nothing like it was in the foreign field now. And it's very hard to rebuild that.
Have you talked to Carl ICAHN at all?
No.
Okay.
No.
And you 100% don't agree with anything that he's outlined for the company?
It doesn't make any sense. I do not believe that makes sense. As a manager of the company, this makes no sense.
Would you ever have any interest, Hank, of coming back to AIG?
No.
In any capacity?
Look, I'm busy doing what I'm doing. We're building a company that's going quite well.
Building your own company?
Building the Starr companies in the insurance field. We're doing quite well.
Now, how much time would you give Peter to prove himself? You said there's a big question mark. How much time do you think
Well, it's not
he
up to
has?
me to give him that time. It's up
Well, it's
to
the shareholders, but you are a shareholder,
Yeah,
though.
but the market is going to determine that. And, you know, and he's got a board. I don't know what the board thinks. I have no idea what the board thinks about this.
Now, Peter also mentioned that, you know, that people are calling him all the time. They want to pick some of the assets up of AIG. You know, he wants to make sure that if he's going to sell assets of the company, that it's the right time and it's the right price. He's not going to do any fire sales. He also mentioned today there's no sacred cows either. There isn't any one, you know, he's not.
So which is it?
Well, so I'm curious, are you interested in any of the assets in AIG?
No.
Okay.
No.
So you've not been one of the ones to call him?
No, we're building the company, the Starr companies, and we're doing quite well. I'm just back from Latin America. We're going to be expanding there. Argentina is a changed country.